Hi everybody, Mike here from Eagle Home Financial. Wanted to go over a few slides with you real quick on the fact that right now is actually the best time to buy a house. And it seems crazy because interest rates are higher and inventory is low, but we'll go through the numbers and figure out why that might be. I'm just going to get myself out of the way here. So we'll start out with existing home sales. So right now, this is a look at what's been on the market since 1999. If you look right here in 2007, we peaked out at 4 million homes on the market. That's way too many homes on the market for the number of people who actually want to move. And that's part of what caused the issue. Plus, they were selling mortgages like hotcakes, so that's another part of the problem. But we won't go into that. So as time goes on, we're looking at 980,000 homes currently on the market. That's extremely low inventory. You can see that's the lowest inventory that we've actually had since before 1999. But if you looked into this just a little bit further, the existing home sales, the real story that's going on here is okay, yeah, there's 980,000 homes currently for sale in the US, but in reality, 402,000 of those are currently under contract, which means that they're not even available to purchase if you wanted to. So in reality, we're looking at 578,000 houses for sale currently in the US. That's an extremely low inventory. So you might be thinking, okay, Mike, this doesn't sound like a great time to buy a house. Well, let's take a look at the next slide. So you can see over the years, this is existing home sales in the U.S. since January of 2017, and there's always the normal lull during the winter, a peak during the summer months, and it comes back down. You see that year after year. So we've seen a pretty significant decline lately. But then, we see those numbers start to come back up, and then with a little decline heading into this past winter, we get up to January 23 on this slide right here, or February 23 on this slide right here. So what's going on is the interest rates are higher right now, and that scared a lot of people off. Inventory is low, so there's not a lot of houses on the market right now. There's also not a lot of people shopping for houses right now. So what happens is if you wait for interest rates to go down and you wait for more houses to come onto the market, so is everybody else. And so the opportune time is we don't know when the rates are going to come down and more houses are going to come on the market, and it's going to be a better time and home values are going to start to go back up. It's one other point that I didn't mention right here, or don't have a slide for, is we saw home values go up for 121 straight months in a row. And then this year, so far, we've seen, or in the last 5 or 6 months, we've seen a modest decline. It hasn't been a significant decline. I mean, the numbers have been pretty close to zero, but it's just below zero. So we've seen a light decline in home values, and that's mainly due to the lack of people shopping for houses right now. Um, so what happens is if you wait until the market picks back up, um, sellers are going to be more confident because they're going to have more people putting offers in on their home. They're going to hold out. They're going to look for a better offer. There's going to be way more competition, which means there's going to be, more offers on the house that you're looking to purchase. If you looking to get in before that happens, the sellers are a little bit more fearful. They want to sell their house and they're not getting the offers they want. They're willing to. There's a little bit of a wiggle room there, and I'm not talking about a case by case basis. I'm just talking about in general. Sellers are a little bit more fearful. Maybe you get that home, for 5 or 10% cheaper than what it was listed for, rather than have to pay the full asking price or compete with all these other buyers and potentially pay a lot more for the house. So a lot less competition is in your favor. So we can't really predict when that we're gonna, get through this period of time. And so the best time is to actually beat out the other competition. Buy the home now. Home values are predicted to continue to go up, and that's what I'm gonna talk about next here. So the last time that we saw a lull in home pricing was around January of 2012. And uh, after it started going up, so right here, no, between November 2011 and January 2012, that's a great time to buy a house. How many people actually predicted that? I don't know, but if you waited until after that time thinking, oh, home values are going to continue to go down, I'm going to hold out and see how cheap I can get this house for. Well, guess what? In the next year, so from these numbers are from March 2012 until March of 2013, home values actually appreciated 8%. And that's with a 2.4 million home inventory, right? We were right here. Now we're looking at 980,000. So say this doesn't happen. Say we don't go up 8%. Say we only go up 3%. Well, guess what? You're still going to be paying more for the house. So let's take a look at the actual numbers. We'll just use this as an example, the home value of 500,000, which gives a mortgage amount of 400,000 if you put 20% down. Rates have risen about 1%. So from the average rate from last year until right now today, rates are up about a full percent. And so that's going to be an increased monthly payment of $257,000. And that increase for the entire year of payments is around $3,000. Now, if you buy a house at an opportune time, you might be able to get it at about 2% less than you would previously. So, or you would if you wait. So, right now, yeah, maybe on a 2%. Well, on a $500,000 house, that's $10,000. If you wait, and like we talked about, say the home values go up by 3%, and there's more competition, all of that, a little bit more of an aggressive market. Uh, you're going to deal with another $15,000 in appreciation. So the home's going to be worth 15,000 more by then. And so if you buy now rather than wait, the cost of the purchase, the cost of the refinance, calculated into this, you're going to end up with a benefit of about $20,000. So on a $500,000 house, you're going to spend $20,000 less than you would if you wait to buy a house. And so the idea is, and the reason I have this refinance number in here is simply because you're going to want to refinance. Rates are going to come back down. Are they going to get back down in the twos or threes? Most likely not. Are we going to see some fives, maybe even some fours? Hopefully, but we're most likely going to be in the fives somewhere. Maybe a year and a half, 2 years down the road, and so you're going to want to refinance at that time. And so that's why, just taking into consideration what the costs are going to be. You're still in a beneficial situation to purchase a home right now. If you have any questions about any of this type of stuff, please feel free, reach out, give me a call, give anybody here at Ego Home Financial a call. We have our clients' best minds and interest, and we go above and beyond. We have access to a couple dozen wholesale lending companies, so we're always going to make sure. So I'm talking about hundreds of different types of loan products. We're going to make sure that you're matched up with the right loan product that matches your criteria. So thanks for your time. Have a great day.